2-1 buy downs. So a lot of people don't know what they are, or maybe think they do, but they don't really, right? So talking to Yassmin with My Mortgage Today, I'm Addie Jacobs with Addie Jacobs Real Estate. Talk to me. 2-1 buy downs.
So popular right now,
right?
And the reason why they're popular is just because obviously rates are not historically low; they're fairly high, and in fairly high just given our prices,
yes,
right?
Yeah.
And so to make a payment stomachable on buying a property, the 2-1 buy down just kind of allows you to get your foot through the door on a property while keeping your payment low for the first few years. And so the way this happens is there's a program called the 2-1 buy down. The easiest way to explain it, let's just say, for instance, if the rate on this property that you're buying is at 6.5, then the 2-1 buy down means that the first year the rate is going to go down 2%. So the rate will be 4.5. The second year the rate will be 5.5, and then the third year the rate would be 6.5, and that will be the third year to the 30th year. So you're always on this fixed 30-year fix, but just for the first 2 years, it just gives you a lower payment. And the idea behind it is that ideally by the third year, by the time you actually get into that 6.5 rate, you would have already had a refinance opportunity, and so the way that works is we have to get a seller credit in order to make that happen. And so I would basically give Addie what that seller credit needs to be, and we'll try to work it up in your offer, whether it's increasing your offer to kind of cover it, right? Or you guys could feel it out with the agent of what you think you can possibly get out of, that offer. But that credit is going to, it is basically what's offsetting that payment for you every month.
Right.
So you can use this on a conventional loan. You can use this on a VA loan. You can use this on an FHA loan. And FHA and VA come with better rates just in general. There's, intricacies to that, but they do come with better rates. So sometimes in this case, you could possibly even get your starting rate down in the 3s at this point using a VA or FHA loan. So it's helpful. It's actually helping a lot of buyers get in on this market, being able to make the payment comfortable.
And do you feel like they balk a little bit? Because I think until you're educated on exactly what it is, I feel like people don't want to go that route. And then when they learn about it, they're like, oh, okay.
Well, you don't lose anything.
No, that's what I mean.
Because the seller's paying for it.
Right.
So it's not I don't want to go that route. It's you kind of have to feel it out on that property that you're offering on.
Right.
If the property is hot, it's priced right, and they've got a lot of offers, we probably don't want to ask the seller for a seller credit because it might not get your offer accepted.
Right.
But the property's not moving, hey.
Yes, get into
Let's see what we can pull out of them, because they want to make a deal happen.
And especially right now.
Yeah.
We're seeing more and more concessions and seller credits now.
Yeah.
Obviously, we weren't seeing that, a few years ago, but now we're seeing a lot more of that where we can negotiate a lot more. Even on my listings, these buyers are coming in asking, I feel like, for everything, and they're almost getting a lot of it.
They're almost getting
it. Because there's not a lot of, if it's overpriced a little bit or there's not, a lot on the market, it's like, yeah.
And again, you feel it out on each property and whatever you're going to offer on. But in some cases, we can even get whatever concession is needed to do the 2-1 buy down program. And then maybe even a little bit more on top of it. And it will help cover your closing cost. So, what a win. And it's not even a matter of, do I want to do this program? Do I not? You don't pay anything for it.
Exactly.
They're paying for it. And then also, once you actually know that you're getting this credit out of them, what I personally like to do as a lender is I like to just, double, triple check what your best options are too, now that we have this credit. Do we still use the 2-1 buy down program? Or what if we just bought down the rate altogether? Just use, we call it points, buying down your rate. And what does that look like? So then we'll kind of compare the two, but at least we already know we have the credit needed for the 2-1 buy down. And ideally, I like the 2-1 buy down better than just buying down the rate, because regardless, even if we buy down the rate, if the rate is at, I don't know, 6.5 and we bought down the rate to 6%, you're still going to refinance that. So it kind of went away. If you did end up, let's say for instance, we did that, 2-1 buy down, and your rate started off at 6.5%, and your first year you're down to that 4.5, second year at 5.5, but mortgage rates drop, right? And you're at 5.5, mortgage rates drop, and I can refinance you right now at 5%. Well, that means you didn't finish out that whole
Right, sure.
second year. We don't want that money going to waste, because that money is the money the seller gave you for this. So what happens is when I pull your payoff, and we do this refinance, and I pull your payoff, whatever remaining seller credit that's there that was unused gets reduced from your payoff.
Love
so
it.
you don't lose it. So we kind of just, we'll always time out the market. If there's a great refinance opportunity, we'll execute it. If not, and you get to that point where you get back to your real starting rate, we're just going to monitor it daily, and I'll tell you when there's a rate lock opportunity that we can execute. But yeah, I think it's a great way just to stomach the payment, especially on the higher prices with higher
And not only
rates.
that is she watches your loan the whole time. So why wouldn't you do something like this, get in the market and then be able to refi? You're always going to refi. I remember buying mine and I'm thinking, oh my God, it was high. And then all of a sudden now it's 2.5. So it's like, so maybe it's not going to get there, right, overnight or anytime soon, but like it's going to go down. Things are going to, fluctuate and go down.
And then even speaking on that, one thing is paying for points. So I don't know if you probably hear people say that, oh, they're charging me points, or I don't know what that is, or whatever have you. So ultimately, buying down the rate is what they call points. And so outside of the 2-1 buy down program, we'll just talk about buying down the rate. So like if the rate's at 6.5, right, for your scenario, and you say, Yassmin, I really want a 6.25. This bank or whatever have you is quoting me 6.25. I'll say, it doesn't look like, let me see what that looks like. Ideally, you're paying points for that. So you're doing a buy down on that. My biggest thing right now on paying for points, I don't feel like it makes much sense, because it comes out of your pocket, especially when you're buying a property, and you're going to refi that 6.25, you're going to refi that 6.5. You just are. So my biggest thing is, let's keep your closing costs low, because we are going to refinance this thing eventually. And when we do refi, we still want to keep your closing costs low. The time that we actually want to, buy down the rate with points is when you just said right now that you got down to 2% when it happened. So let's say, for instance, something crazy happens in the market and our rates get back to that 2020, 2021, COVID era. And let's say the rate's at 3% at that time. And I'll say, hey, you know what? I can get you down to 2.5, right? If you paid X amount of points. Well, that makes sense. Because you're not going to get out of it. You're staying put. You're going to keep this property within your family. You're going to give it to your offspring. You're going to, house stays, we're not touching. If you ever needed to access equity, we'll probably grab a HELOC or whatever have you. That's when it makes sense to buy down the rate. But right now, my biggest factor is stop focusing on the rate, and let's focus on what money's actually leaving your bank account. And that's for closing costs. And so a lot of lenders will dangle like, oh, I can do this rate. But then you get their fee sheet and you're like, what the heck is happening? And they're not going to explain it to you. They're just going to say, hey, 6% rate.
Here we go.
And so we don't want to focus on rate right now. We want to just keep costs low, and then just know that you're not going to just refinance once. You're going to probably refinance a few times, while you have the property. So
perfect.
Yeah.
So there is a lot that goes into it. So don't get stuck in the weeds there, because everybody's scenario is different.
So different.
And so sit down with Yassmin. Give us a call if you have any questions. We'll set up a meeting with you and then take it from there. All right, you guys. Till the next time.
Bye.
See you later.